Hey everyone, welcome back to Stocks Telegraph, your go-to spot for the latest updates and insights on the stock market. Today we're diving into NexGen Energy Limited, ticker symbol NXE, a major player in the uranium space, and how they're gearing up to meet the world's growing demand for clean energy. This company is making huge strides in the resource-rich Athabasca Basin of Saskatchewan, Canada, a hotspot for uranium. So how is NexGen doing lately, and what's in store for the future? Stick around as we break it all down. But before we get into it, make sure to hit that subscribe button, drop a like if you're enjoying the content, and share your thoughts with us in the comments below. We'd love to hear what you think about NexGen Energy and its potential. Got questions or insights? Drop them below. We read every comment. And hey, if you know someone who's into the energy or uranium sectors, share this video with them. All right, let's talk about NexGen Energy and how it's stacking up in the market. Right now, the stock is sitting at $8.22. Not bad for a company that's making waves in the clean energy world, right? But here's the kicker. Analysts have set a target price of $10.04, which means there's potential for about a 22% upside from its current price. Now get this, NexGen is showing some solid confidence from analysts with a mean recommendation of 1.06, which is right in between strong buy and buy. So it's no surprise that experts are feeling pretty bullish about this stock. Looking at the year-to-date performance, NXE has seen a solid 17.43% increase. And if we zoom in on the past month, it's gained 11.68%. All signs point to a positive momentum, both short and long term. Oh, and here's a fun fact. NXE is just 8.26% below its 52-week high. So there could still be room to grow. Not to mention, the return on investment for the past year is a solid 12.02%, and its earnings per share growth, a jaw-dropping 233.90%. Yeah, you heard that right. They're definitely improving their profitability. Financially speaking, NXE's debt-to-equity ratio is at 0.35, which is super healthy. It means they're not over-leveraged and are managing debt pretty well as they expand. Plus, the stock is trading 10.50% above its 50-day simple moving average, which is another good sign for short-term growth. So things are looking pretty solid. Let's talk about some exciting updates. NexGen just hit a big milestone with its Rook I uranium project in the Athabasca Basin. The Canadian Nuclear Safety Commission completed the final federal technical review, and this brings NexGen one step closer to full approval. Next up, a commission hearing, which is a crucial step to get the green light for the project. And the good news doesn't stop there. In September 2023, the CNSC accepted NexGen's federal license application, and by November, they got provincial environmental assessment approval. And let's not forget, NexGen is serious about maintaining high environmental standards, engaging with local communities, and supporting global net zero goals. They're doing things the right way. Speaking of growth, NexGen raised 224 million Canadian dollars in May 2024 through a revised placement with Aitken Mount Capital Partners. This boost is going to help fund their expansion plans and keep that momentum going strong. And they're not just stopping at Rook I. NexGen has made some huge progress with its exploration efforts. Their 2024 drilling campaign at the Patterson Corridor East just wrapped up, with over 34,000 meters drilled. What's really exciting is that 19 out of 30 drill holes hit significant mineralization. This is a game changer for the company. Full assay results are expected in fourth quarter 2024 and first quarter 2025, but the early signs are promising. PCE could become a major new resource for NexGen. And guess what? NexGen plans to kick off a big drilling program in January 2025 to unlock even more potential. Now let's take a quick look at NexGen's recent financials. For third quarter 2024, they reported a net income of 10.25 million Canadian dollars. That's a huge turnaround from last year's net loss of 52.14 million Canadian dollars. In terms of earnings per share, NexGen posted a basic EPS of 0.02 Canadian dollars, a major improvement from the previous year's loss of 0.11 Canadian dollars per share. And for the first 9 months of 2024, NexGen reduced its net loss from 78.09 million Canadian dollars in 2023 to just 11.17 million Canadian dollars this year. Big improvement, right? Analysts are definitely taking notice, with firms like RBC Capital and Raymond James raising their price targets for NextGen. RBC's target went up to $10.70, while Raymond James bumped theirs to $9.63. These upgrades reflect growing confidence in NextGen's future growth. So, to sum it all up, NexGen Energy is on a strong upward trajectory. From solid stock performance to impressive drilling results and regulatory approvals, they're checking all the boxes. If this momentum keeps up, we could see even more growth in the future. Alright, that's a wrap for today's video on NexGen Energy Limited. If you found this update helpful, don't forget to hit that like button, subscribe for more stock insights, and share your thoughts in the comments. And of course, feel free to share this video with anyone interested in the energy or uranium sectors. Until next time, keep watching the markets, and we'll see you in the next video.